The gold market rebounded from its mid-December lows, but can it break the $1,900 resistance level? Peter Hugg, Global Trading Director of Kitco Metals, is back to give us his weekly rundown and how he's positioned for the remainder of the year. Peter, welcome back. This is, I think, our last talk before the end of the year. It's a pleasure speaking with you.
Yeah, it's nice to be here, David.
1900, 1920 was your, you said it was possible before the end of the year. Are you sticking to that? We're seeing very close to 1900. It's just sticky up at that level.
Yeah, I mean, if you're asking me, you're putting me in a corner. Yeah, I think 1920 is still a shot. We've had 1897 tested twice, yesterday and this overnight, coming into this morning's trading. Brexit is still sort of in a fluff, and I'm pretty convinced that we're going to get this stimulus package. I'm a little concerned it might already be priced into the market, so it might be, buy the rumor, sell the fact. But I think there's a possibility if we get a gold close today in the 1890s, I think there's a reasonable shot we might see a test of 1920 before Christmas.
We get caught up in the short-term prices a lot because we speak on a weekly basis. But actually, if you look at if you just go back a couple weeks, gold's had a pretty nice run since the November lows, right? From the 1780 level, 1770 level, all the way up to now. It's been a pretty nice run with its ups and downs in the last 6 weeks or so. But it's been pretty good. Would you call this a bull run that we're in?
Well, I don't think the bull market has ever changed. I mean, there's always corrections within a bull market. As you remember, again, it's always like Groundhog Day for me. Every day's the same. But when it got down, we were pretty firm that 1775 was a very solid line in the sand for us. And if you remember, we entered the market at those levels, and silver, south of the $23 level was also the entry point. Nothing from a macro perspective has changed. I know it's frustrating, and people are looking, for gold to, be sitting at, whatever the number, 2,500, 3,000. I mean, whatever number is in their head. And I still think that trend through 2021 is going to realize that kind of print. But in the short term, the market trades just like the equity markets trade. You get movement up when the market stalls. People get a little worried. Sometimes they get bored, and they'll take profits, and then you'll have the market move down. But in the overall trend perspective, as long as significant support resistance levels play out, you've got to go with the macro trend, which I still believe in the metals is higher.
Okay, yeah, let's briefly touch on the macro trends for the viewers who missed our show last week. Let's talk about your outlook for 2021. The macro trends are still in place. Are you talking about monetary policy? You're talking about economic growth? What are the variables you're looking at, Peter?
Well, I mean, you 2 weeks ago, you had the EU come out and the central bank there indicated that they would be accommodative through 2023. This week we had the Fed meeting. Powell didn't say a lot, but he said enough. He said, look, he's concerned in the short term. He thinks first quarter 2021 could be problematic until the vaccine takes hold. But he reiterated that, the Fed would be accommodative through or up to 2023. And he's fairly flexible on his inflation target. So, I mean, you can't get a better green light than that from the central bank. And then on top of that, it seems apparent that we're going to get at least a short-term stimulus package of somewhere in the 900 billion level. And then Biden indicating when he comes out that this 900 billion is nice, but it's a Band-Aid, and he's looking to put in more money. So you're going to have some fiscal stimulus also hopefully coming in the first quarter, again, until this vaccine does its job, and in that context, you've got to be constructive, hard assets.
Yeah, I spoke to an economist recently, and I was told that the Georgia runoff is an important event to look at because that determines how much stimulus we're going to get. Do you agree with that?
Well, it's certainly, if the two seats, Senate seats, go to the Democrats, I would be extremely constructive the precious metals markets, because then Biden's basically got a blank check. Now, if the Republicans take one or both of those seats, then we have a lame duck presidency, and it's going to be much more difficult for Biden to get things done. But that's going to create, again, angst and volatility in the market. I think either scenario, again, portends well, at least through the first half of 2021. And then depending on how this economy recovers, if it recovers, you'll have to reassess, whether the trend is still intact.
Yeah, what are some of the things Biden wants to do, and that's going to require basically a lot of money?
Well, he definitely wants to throw a lot more fiscal stimulus into the market. Wants to do an infrastructure project to get Americans working again. I mean, all good ideas, not so much the spending of the money, although that's necessary, but the infrastructure program, I think, is long overdue in the U.S. I think he may reverse his policy on China. So, there are a number of things that he also wants to get back into the Green Deal and join the Paris Accords. All of that costs money. So, I see Biden coming in, spending money. He's indicated that he'll try to pay for this with tax increases. I think if he has a majority, including the Senate, that's a possibility, but I do not think it's a possibility in 2021. I do not think raising income tax and or capital gains tax in 2021 is going to be on his plate. That's more a 2022 obstacle or issue that we're going to have to look at.
Do you think the Fed could hit their 2% inflation target next year, given all the stimulus you just talked about?
Again, I think if the economy turns and we get some semblance of normalcy, hopefully by end of second quarter next year, given the fact that the central banks, both the Fed and the global central banks, are going to remain in stimulus mode through 2022. That being the case, I would suspect that they are going to be behind the curve if the economy picks up and demand resurfaces, behind the inflation curve. And again, that will also be, in my opinion, constructive for the metals, sort of a 1970s type of scenario.
Mm-hmm. Now, let's talk about silver. Silver, a couple of times you have mentioned to me that in 2021, 30s, potentially even 40s is possible for a price range. Are you sticking to that?
Yeah, again, it's, anybody that just says, yeah, it's going to be at $35. Yeah, certainly within the realm of possibility. If I think silver goes to $35 with gold just going north of $2,000 again. I think there's more interest in silver at these levels. Now, take that out of the equation and just sort of have gold hang around. I think the ratio will favor silver next year, especially if the economy rebounds. There's going to be industrial demand pickup in silver, and I think from that perspective alone, I think the gold-silver ratio is going to narrow in favor of silver. So I'm constructive. Both metal groups into 2021, I am more constructive from a percentage gain perspective on silver than I am on gold.
Is it possible, this is a view I've heard, but is it possible that silver and gold could decouple, meaning that silver could go up and gold could go down?
Yeah, it decouples, but it decouples in the context of ratio. When you sort of look at the historic ratio of gold and silver, a lot of analysts sort of say the historic norm is about 35-1. So it's possible gold does nothing, silver moves up, and that ratio comes down from where it is now. And I think it's around 70-1 right now, where the ratio gets maybe to 45-1. 45 ounces of silver to an ounce of gold, as opposed to 70 ounces of silver to an ounce of gold. Or you have gold moving up and silver accelerating the move higher, achieving the same type of ratio tightening. If you're asking me if gold is sitting here at 1,900 and gold drops to 1,500, will silver go to $35? No, I don't think it will.
Okay, and so let's talk about your forecast for gold. And you've given your outlook for silver. $2,000 for gold by let's say the first quarter of 2021. Is that a reasonable estimate, you think?
I think $2,000 is certainly within my target range. Again, I'm a trader, so I'm still looking for price points to break up. I need 1925 taken out. I think that's possible to approach that level between now and Christmas. Might be able to take it out before the year end. And then, once we get through 1925, then, the next target is going to be psychologically $2,000. And then, from there, you're probably looking at the high, which was roughly 2175, if I remember right. So those are sort of levels that have to be breached on the way up. I think if 1925 is taking out, I think $2,000 is a given, and it'll happen fairly quickly.
Do you anticipate more or less monetary stimulus next year than compared to 2020, Peter?
More or less. If the economy shows any semblance of legs and reviving itself by the end of first quarter next year, I don't think the Fed is going to need to do more. I do think we'll have fiscal stimulus over and above this current package that we're talking about as a bridge to get us to the end of first quarter, possibly second quarter next year, when they hope to have 75 or 80% of Americans immunized. So I think it may come more from the fiscal side than from the Fed side. If the government is not capable, because Biden doesn't have the majority in the Senate and the Republicans stand in his way, if the government's not capable of creating that fiscal package, then I think the Fed does have tools at its disposal to create more liquidity in the market, and I do think they will step up.
So here's what I'm wondering, Peter. Monetary policy this year was one of the main forces behind gold's rise, according to many analysts that I've spoken to. Now, I'm just looking at the charts. I'm looking at GLD as a proxy. Gold's up approximately 19-20% year to date as of today. 20% growth in a year is substantial for gold in any year. Can we expect the same kind of growth momentum to continue to 2021?
Well, 20% at current levels is about $200, give or take. I'm sorry, about $350, give or take, which at current price takes it just about $80 over the high that we had this year. So, from this level, 20% is certainly achievable. And if we are in a bull market, bull markets don't last a year. I mean, when gold hit the high in 2011, and it took almost 9 years or 8 years to get to the low, or close to the low on the cycle. And since early 2019, we've been moving higher. So I think we're in very early stages of the bull market in the commodity sector in general. And which will also be positive for gold, silver, platinum, and palladium. I'm getting much more positive on the industrial side of the metals complex, i.e. platinum, silver. Just look at rhodium. Rhodium's trading at almost $16,000 right now. Palladium is still trading, north of 2,300. So I'm getting more constructive on the industrial side, copper on the industrial side of this market, and I think gold will at least be carried along in that trend. And I think the metals, the commodities trend, has still got a few years to run before we get a situation where the central banks have to finally reverse course and start to tighten. And once you start hearing the verbiage that Powell or whoever the Fed chairman is, and some of the central banks or the central bank in the EU starts talking about, we're sort of done and we're looking now to sort of unwind this easing. That's your signal that we're probably close to the top. And I don't see that for a couple of years.
I get asked this question all the time by friends and family is, hey, gold's going up. Should I buy now or wait for a pullback? And I always say, watch Peter Hugg's videos. He breaks it down very succinctly and clearly. But let's say that somebody were to ask you this question today. Hey, should I wait? Should I buy now? How would you explain? How would you answer that question?
And again, I don't want to sound old hat here. I mean, I've been very consistent throughout my career, and I'm moving on to 48 years in this business in 2021. And what I looked at, when people ask me that question, and I've had that question asked to me ever since the mid 70s, is really what's your intent? I mean, what is the reason that you would want to hold precious metals in your portfolio? And they can't answer the question most of the time, but generally, I keep going back to what I was trained as back in the 70s when I took the securities course and I was managing other people's money. Is I think it's extremely important to have a balanced portfolio. And I think within the context of a balanced portfolio, you need hard assets. And those hard assets could be gold, could be silver, could be an industrial metal. It could be oil. But you need a component of your portfolio in hard assets. But you don't stop there. You need to just you need to recalibrate your portfolios, whether it's every 6 months or 1 year. And I think that's the biggest thing people don't do properly. And if you recalibrate your portfolios, you'll make adjustments throughout the lifespan of your portfolio. So if the metals do take off, they'll probably represent a percentage of your portfolio that is higher than what your goal is. And in that context, you sell some of that position. And vice versa, if the market goes down, your portfolio position in the metals will probably be underweight, in which case you buy more. And if you use that concept, whether it's in the metals or in the equities or in the bond market, as a balanced portfolio approach, you'll tend to liquidate into strength and buy into weakness. And that's the only way I can explain it. Now, if some guy comes to me and says, well, I want to buy gold because it's going to double. Okay, go to the casino, play black or red, and yeah, it might, but it might not. These analysts that have been saying since 1978, gold's going to $10,000, $20,000 an ounce. Some of them are still walking around. Yeah, they might be on walkers today. But they're still walking around and they're still spouting the same stuff. And maybe they'll be right, but God almighty, I'm not buying something on the anticipation it's going to go up 500%. I'm looking at it as an investment that should form part of your portfolio. If you're looking for me to tell you that gold's going to $10,000 an ounce, I'd strongly recommend you don't listen to any of my comments because I'm never going to say that.
Yeah, that last point, this is more philosophical, but would you want gold to go to $10,000? What does that mean for the rest of the economy?
That's the other argument. I go to conferences and sometimes I need to wear a flak jacket because sometimes I'm more bearish than bullish in the short term. Again, because psychologically I'm a trader. I'm not I'm not speaking to an audience from an investor's perspective. But I say to people, so you want gold at 10,000? Yeah, because the whole system is going to collapse and I'll be able to use gold as a barter. And I'm saying, do you really want that? And they ask me, what do you mean, do I want that? And I said, well, picture yourself in a position where the entire financial system is collapsed and there is no medium of exchange. And you have a gold bar and you need gasoline for your generator or you need food. And you think if you went to your neighbor's house and offered him a 1 ounce gold bar, he would give you gasoline or food. I think not. You're going to have to barter with something that this person can use as well. Now, again, we're talking Armageddon where the whole financial system has collapsed. So why would you want gold to be at $10,000 or $20,000 an ounce? Because everything else you own, your real estate, your 401k, would all be decimated. Now, if you're 100% in gold, that'd be great. But that's a big gamble, man. That's like going to a casino, putting all your money on one number on roulette and taking the spin, and hopefully it goes.
All right. Well, I think some people say the whole market's a big casino, but that's a discussion for another day. Peter Huck, I want to thank you so much for, not just today, but all the interviews you've given us this year. It's been a great year for news, and I want to thank you so much for being a part of it.
Well, I appreciate it, and happy holidays to everyone. Take care.
Thanks for watching. I'm David Lynn. Stay tuned for more.